So Microsoft announced that it's tapping its brakes on the build out of its data centers in the US and abroad. And like every other tech stock in the NASDAQ, Microsoft is down from the recent highs 23%. However, if you look at the monthly chart, price is in a very nice area to go long, as the smart money has left its footprints on the charts. Price is now in the process of breaching this monthly buy level, but we still have another month to determine if we get a close below. If we get a close below, that opens the door for price to move lower. And before we continue with the analysis, let's look at the actual news. So Microsoft has scaled back or delayed a series of data center projects globally, signaling a more measured approach to building infrastructure that powers its AI and cloud services, according to a Bloomberg report. Now, while Microsoft is seen as a front-runner in commercializing AI, largely through its partnership with OpenAI, the company's infrastructure spending plans are closely watched by investors as an indicator of long-term demand. Now, the recent pullback has raised questions about whether Microsoft is adjusting to short-term construction bottlenecks or reassessing demand projections for AI services. Some investors view the slowdown as a warning that expected customer spending may not be justified the company's current level of investment in server farms. That sentiment has added pressure to tech stocks with exposure to AI infrastructure. And your bellwether is going to be NVIDIA, and like every other stock in the AI space, NVIDIA has been hit as well. So as NVIDIA goes, all the other related AI stocks go. So again, this is the monthly chart. As you can see, price initially dipped into the zone in March, and now to begin with April, price is in the process of breaching if this blood slaughter continues. All right, let's take it down to the weekly chart. And I do want to point out to you this beautiful weekly level at 310 that was set up from this rally, base and candles, and then the rally out. Price pulls back not once but twice, gives retail investors the opportunity to get long with the smart money before prices resume higher. Now the charts were setting up for the same type of setup: a rally, base, rally, base and candles, and then the rally out. But right now the sellers are in control. You can use a trendline break to give you a conservative idea of prices reversing. I do want to show you that daily buy level now. Similar to what we saw on the weekly chart, rally, base and candles, and the rally out. Price pulls back, and so it's not fresh. All right, you had two touches, depending on how you draw your zone. It's not fresh, but the penetration wasn't more than 50%, making the zone still good. However, you can't just get long. Again, there's a bloodbath taking place on Wall Street, and so you want to use this trend line as a conservative indicator to go long. If you do choose to go long, again, prices are off from the highs 23%. So let's see what happens this week, this month. Personally, I think we are near the bottom. Yes, price can go down another 5 to 10%, but I think we are in the process of forming a bottom. Just a note, it would take price 17% increase to get back to the 200-day moving average, and that's going to serve as a dynamic resistance level. Other thing to note, you do have a depth cross. That's what the 50-day in red crosses over and below the 200-day in yellow. So it's not safe to go long yet, but we are getting closer to a bottom. Thanks for watching. Subscribe. Please like the video.